Here we go, guys. Real quick video. Again, we're going to be calling out Gareth Soloway over at In the Money Stocks. And full disclosure, back in the day, I was a member of In the Money Stocks with Gareth Soloway and Nick Santiago. Good program, good foundation, learned a lot. And matter of fact, I was so desperate for training. I actually took, part-time jobs here and there in order to pay for it, so I wouldn't have to come out of the, regular family budget. And that's why, I'm here doing this now and able to, make the market an ATM machine. But anyway, whether you take, a course from Gareth or ourselves, you need training, consistently through your career. Matter of fact, I got the bike strapped up now, getting ready to go. Take a course this weekend. Been riding sport bikes since the mid 90s. Yeah, I was one of those guys back then, not anymore, obviously. Splitting cars, 120, 130 miles an hour, riding wheelies on the interstate, back then. But yeah, you never know it all. You never learn everything there is to know about sport bike riding or charts. So that's why we always, keep our education going. So let's get to the video regarding the NASDAQ.
What's going on?
What charts are we looking at today?
So let's take a look here, right? So check this out. This chart, look at this move up, down, and then sideways chop, up, down, sideways chop. You'd think these are in the same time frame, even if they're different stocks. You'd think, oh, this must be the same time frame. This must be recently, right? Well, actually, this is the NASDAQ from 2000, and this is the NASDAQ from now. And look at the similarities here. Look at the run up, the drop, the upside consolidation. The run up, the drop, the upside consolidation. The only difference here is look at what happened to the NASDAQ. The NASDAQ literally dropped 75% following that same chart pattern. To me, that scares me because if this pattern is repeating from 2000, then what you're setting up is for a major move to the downside. The last thing I want to just point out here is this high to this low, 37%. This high to this low, 37%. 2000, the year 2000, the year 2021 into 2022, right? So
Okay, so let's go right there. What he's talking about. The first thing we're looking at the NASDAQ from 2000, and he's talking about a 37% pullback. So let's pop that up here from the high to this low that he's referring to. I get 39%, but hey, close enough. But at the same time, we're not even close to the 200. Now, when you start trading under the 200, especially on the weekly chart, as you can see, we had a catastrophic failure here to the downside. Okay, so we're going to try to do, apples to apples here, but let's see what we end up with. So there's your move down that he's talking about, then a move up, and then it rolled over. Okay, now here is, basically current day NASDAQ from the high to the absolute low that we put in. Okay, this is the low that we put in right here. Now this one is, right there at 37%. So I'll, give them that. So, but the big difference is we were able to consolidate and bounce in or around the 200. Okay, and now price is even over the 20 simple week moving average and the 200. And then to add a little caveat to that, um, let's use this measure move right here from the low to the high. Okay, that's about let's just call it 20% move. And then we came back a shallow pullback. And when price sticks the 20 or the 200, like an Olympic gymnast, and it moves up, then you have a, higher odds, higher probability you're going to exceed there. You'll take this move, the previous move, and push it up to this side of the chart, okay? And a lot of people would start here at the breakout. I like to just be conservative, start where the breakout started. And if you have a, about a 20% move up, there you go. So now what's holding us back now from accomplishing that, you've probably already seen it, that red dashed line on the chart. We had this high pivot here going back to August, first of August, 2022. So the best case scenario is for us, have that move down, up, maybe a shallow move, pullback, and then go. And what we're trying to look for here possibly is that W formation. Well, there's three main ways, price action, breaks out and, moves higher. You got that V shape like we did right after COVID. And then the next one, which is the strongest and the best, that, W formation where you have a low, higher low, and you just want to keep, building from there. But we need to take out this high here and start making new highs, or, it could be game over. Okay. So I'll say that. But until we pull back down here and take out this low that we put in back in October, like we come up, roll back over, then, I'll call it good. But anyway, just want to make that kind of comparison there, make sure we were talking apples to apples on the NASDAQ. But right now, the NASDAQ's a whole lot, more positive, bullish than it was in 2000 during that same, measure move that we were referring to. And another thing, people say, there's no absolutes, no 100%, no 100% in the charts or the markets. And actually, there is 100% of the time when the 20, the 200, doesn't matter if it's a daily chart, weekly chart, whatever, come together. 100% of the time, they're going to separate and go far and away from one another. Okay. And basically, yeah, price is going to, push to the upside far and away, which will lead the 20, or price will dump to the downside, and of course, lead the 20 down and under the 200 far and away. So we're definitely keeping an eye on that. And, price action, everything on a chart is a lagging indicator. The price is the only thing that's, the true current picture of what's going on. But guys, thanks for, watching the video, and any questions, concerns, put it in the, comments below, and we will see you on the charts.